British pound had a volatile session, seeing a wider range, 123.60 all the way up to 125.10, yet closing out the session at 124.40. That's down on the day, but take a step back for a moment. After Monday's volatile trade decline and rally, then we saw the pound rally Tuesday and Wednesday, only to see it reverse today after the Bank of England met and cut rates and projected more cuts down the road. So ultimately, again, seeing the pound rally ahead of the central bank meeting, only to see it turn around and sell off after the event, but still holding higher on the week. So we have seen a lot going on in the pound versus the dollar, but while it is lower on the day, it remains higher on the week, again, closing out today at 124.40 after the Bank of England cut rates 25 basis points. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll see that volatility was higher after the central bank meeting. Typically, after big events, we see volatility moving lower as the market kind of looks back and sees the event in the rearview mirror. Well, that wasn't the case today. Obviously, given the fact that we still remain higher on the week, but also because we have some big event risk coming up, starting with tomorrow's Nonfarm payroll, and then next week we have the Fed chair speaking along with U.S. inflation data. So a lot still out there that will affect the pound in the days to come. Lastly, let's talk about what we do have tomorrow. As I mentioned, tomorrow is Friday, the first Friday of the month, which means the non-farm payroll number. With the non-farm payroll number not expected to be as strong as we saw last month and unemployment to hold steady, really the market will be looking for any kind of sense of, will this push the Fed one way or the other to cut rates or pull back on any potential cuts down the road. Likewise, we'll also look at that day after the central bank meeting, the day after the Bank of England meeting, see how the pound reacts after digesting what transpired today in the rate cut that we saw.